Thank you, Mr. Chairman, and welcome, Chairman Bernanke. It's always a pleasure to hear you because you are eminently sane about all these issues. I have heard from our life insurers and grantors or providers of annuities that they're very concerned, as you can imagine, about an interest rate squeeze that may occur in the future, almost predictable in certain respects. How do you recommend that they proceed, that they anticipate the challenges that we're facing because of the way in which we have to have an accommodative monetary policy?
Well, we've had numerous discussions with insurance companies and pension funds and others, and there certainly is a problem in the sense that they're under current accounting rules, their obligations to put money into the fund or can be greater with low interest rates, and I agree that's a problem and one that we've discussed with them. Again, going back to my conversation with Mr. McCotter, on the other side, we're trying to strengthen an economy that will give them higher returns on their portfolios. So it cuts both ways. I've talked to the insurance, as I said, I've talked to the insurance companies. They recognize that low interest rates are not a permanent condition, that at some point the economy will get back to a situation where interest rates can be more normal, that we're trying to help the economy, that we recognize that there are some side effects of low interest rates and that we're attentive to that. But again, our first responsibility is to meet our dual mandate and try to support the economy and keep inflation near its target.
A similar question obviously could be asked in behalf of our community banks who are concerned about, their long-term loans that are being obviously offered at very low interest rates. Same sort of approach, I assume, that...
Yes, I actually discussed this point in a speech I gave a couple weeks ago at the FDIC, and I made essentially the same point, which is that the net interest margin has two parts: the difference between deposit rates and safe rates, but also the difference between safe rates and loan rates. And the ability to make profitable loans depends on having a healthy, and so the short-run cost of low rates should be worth it if we can get the economy moving again.
Chairman, if I may, a bit broader question, or perhaps more of a 30,000-foot question. You have many times, including here today, pointed out how important it is to have federal policy that reflects the impending crisis that we face in terms of managing the debt and how that weighs on economic growth. Do you ever feel as though you're talking past your administration and Congress, that we're talking past each other, and somehow, how can we make your message resonate? People like me are very sympathetic to it, obviously. But.
Well, these criticisms are easy for me to make. I don't have to deal with the politics, and I know they're very, very difficult. It's always hard to explain to people, why you have to tighten your belt one way or another. I think on the one hand that educating the voters is an important thing, and making sure people understand what the trade-offs are. And I think if they understand it, they'll be more sympathetic to the tough choices that we face as a country. But I also think that there is some scope for bargaining within the Congress. We've had some very close calls recently in terms of making progress, and we have, as I mentioned before, this fiscal cliff on January 1st. That might prove an opportunity to negotiate a better longer-term outcome. We'll see. But I think those are the two directions. One is trying to create a framework in Congress for debates, maybe a set of goals, for example, and the other is to get the voters on our side by education.
I sympathize very much so with that point of view, and have said so myself as well, that it is about education and awareness. The fiscal cliff to which you refer would be the enormous tax increase that we face that will place.
We have a number of measures, including both tax increases, the expiration of the payroll tax cut, the sequestration that comes out of the super committee negotiations, all those things are hitting on the same day, basically, and it's quite a big impact.
Thank you for emphasizing how important that is, sir, and thank you for your great work. I yield back, Chairman.